Hi, thanks for joining us today. My name is Lauren and I work on the marketing team here at WebGility, and we are going to walk through transactional accounting for e-commerce with some of our experts. So to kick things off, we're going to talk about some housekeeping/agenda items. We're going to record today's webinar and we are going to make that available to you within 24 hours of broadcast, and we'll send you slides, the full recording, the whole shebang. So keep an eye on your inbox because we'll be sending that out soon. If you have a question and want to get our attention on social, use #Unify, and we'll be checking those out throughout the broadcast and answering your inquiries. And we want to hear from you. So did we cover all? Are we talking about topics that are relevant to you as an e-commerce seller or accountant? We definitely want to know. So if you have some ideas for content or would really like to see us tackle a certain topic in our next webinar, you can just drop us a line at marketingrequests@webgility.com, or again, just get our attention on social. So today's experts are two of our favorites. We have Susan Hawkins, who's a CPA and actually was recognized as one of the top 100 advanced QuickBooks Pro advisors. So Susan is really active on our blog and we feature her on webinars all the time, so she's one of our favorites. Colin Cates is also joining us, who's a product manager at WebGility and is a seasoned e-commerce veteran. He's been with WebGility for a number of years and again is really active on our blog. So Susan, if you want to kick things off on our topic of choice for today.
Sure thing. Thanks, Lauren. Moving on to the next slide, our topic is journal entry accounting versus transactional accounting. You may not recognize the terms used, but I think you'll recognize the actions. Journal entries, where they fall short on the next slide. Most accounting platforms are designed not to need journal entries. Journal entries can be used kind of at the end of the year or maybe for some cleanup, but it's not really an efficient way to run your business. And they also don't give you the level of detail that you need. So Colin, you see a lot of this when you're working with clients as well, don't you?
That's true. Yeah, we see a lot of e-commerce sellers that the burden is on just getting things recorded somehow. They're not too worried about necessarily how they're recording it, and so sometimes when setting things up to begin with, they skip some of the introductory steps that really set you up for transactional accounting and being able to see some of those more actionable insights from that. Right. And like you mentioned, as far as bank feeds are a very common option that people go with because they know the information is very accurate. But the problem is they're a little bit too high level, and just like manually doing journal entries, they lack a lot of that depth that leads you to better profitability reporting and that kind of thing.
Exactly. Yeah, the bank feeds are, I think, a really good topic just to kind of chat about for a second. Especially with QBO, they do such a good job of pulling in the banking and the credit card data. And I think sometimes that can be a disservice to your end user or, maybe your bookkeeper working in the file, because like you said, you don't get that detail. You might just see, $1,000 from your credit card sales. Mm-hmm. That's going to be net of fees. And you're just going to record, some people just record that as sales and kind of miss all that detail that, and all that insight that goes with it.
Yep.
Which, for example, I think that's a good segue to the transactional accounting and really what that is. That's, sort of based at the item level. When you've got your items or products and services, if you're in the QuickBooks world, you can use that to create the transactional documents themselves. So a sales receipt, an invoice, and then, on the back end, you may not realize it, that's all posting directly to your financial statements and your sales reports. So without really any extra effort, you're going to get great visibility when you get down at the detail level.
Mm-hmm. Yeah, we're talking about the benefits here a little bit. I always, when people are a little bit more unfamiliar with transactional accounting, I always sort of warn them that the burden of transactional accounting is all front loaded. It's all getting everything set up right to begin with. And then, your daily operations, your daily entry of those transactions ends up becoming much easier in the long run. And of course, you're provided with all the subsequent benefits of those mapped accounts and, cost of goods sold and expenses and that kind of thing.
Right, right. So in the next slide, I think we have a nice picture that kind of shows that for people that are unfamiliar. You know, when you're talking about a sales receipt or an invoice or even a sales order, you know, you can start with that transactional document, which you need to place your items or, you know, products on the body of that document. And what a lot of people don't realize in doing that, assuming their item is set up properly, when you record that transaction, you're also recording the revenue, and you can choose multiple accounts for that. You know, the shipping income, you're reducing your inventory, asset value, and recording it to the cost of goods sold, all with that simple document. So it's not really additional effort to record the transaction, and, you know, we can streamline it. And even, you know, getting this set up, Colin, don't you have some good ways to streamline that for people as
Yeah.
well?
And I would say, you know, one of the things that's interesting here, like when when you see this diagram, the way that it's laid out, showing that, you know, you're creating some sort of transaction like a sales receipt or an invoice that you're applying these items or objects to that you already created, and it's making those multiple entries for you. You know, what's interesting, I think, is you see a lot of times when people are not doing this and not, you know, recording transactionally, that instead what they end up skipping to is basically those three boxes near the bottom there, where, you know, maybe you're making like a direct revenue entry, and because of that, again, it leads down sort of a very awkward way to try and handle that, where you end up recording revenue for different like sales channels or things like that, maybe into different accounts, because you're trying to separate that out when that's not really the way that it's intended to be done. You know, all the products and services are using they should be using those accounts you already set up and not really deviating on a transaction by transaction basis. So just, you know, starting from this top-down view, I guess, you know, it aligns a business not only with what should be easier operational workflows day to day, but also, you know, fits within the bounds of what the accounting system is expecting you to do.
Right. And, you know, I'm always surprised at the large volume of businesses that I come across that aren't doing it this way, that are missing the point on the products and the items. And like you said, they might just record like aggregate sales numbers from, you know, Amazon sales or Magento sales as a revenue category.
Yep.
And they have no idea what they sold there, and they don't even realize that they could get that detail. And also, if they do really want to see the channel, that's, you know, that's when I bring up classes to them, which a lot of times is a new concept, but people love that. You know, you just enable classes in QuickBooks, and then now that makes a column for you. So now you can see your particular items and then what channels, you know, they're selling upon, which can really lead to some good decision making as well.
Yep.
Very easy to do. All right, so Colin, you want to touch upon this one? Just how you see it flowing?
Yeah, so again, sort of following up on that that last slide there, you know, if we're just looking at how transactional accounting happens, you know, whether you're doing it manually or automated, it's sort of this step-by-step process where you're entering whatever order that you're looking at as some sort of posting transaction, like a sales receipt or an invoice. You know, different strokes for different businesses, but that when you're looking to add those items to that order, it's going to do those journal entries for you. If you are tracking quantities, you know, inventory items, those quantities will be adjusted. Excuse me. If you're tracking non-inventory parts, then you'll still be recording, you know, the number of parts that you sold and the revenue and everything. You're just not removing anything from inventory asset.
Right.
And then finally, when you know, once you've finished making those changes to the transaction and you save that that receipt or invoice, that your reports, like we were talking about, at sort of your end goal there of doing this, is that those reports are immediately updated, and you can see any type of, you know, changes that happen to different accounts there, to your inventory levels, that kind of thing. So it's a very, you know, it's an instantaneous process that when you fill out that single transaction, you can immediately see the results of it right behind the scenes.
Right, and that immediacy is so critical, because it, again, always surprised when I'm working with a client and I see that what they have been doing, where they've got somebody at the end of the month, maybe keying in aggregate sales numbers, so they've already got that delay in seeing how they're doing.
Yeah.
And you know, and the minute you hit save, that information's in there, and you can run your reports and see where you stand.
And that's a good point you just brought up there, that, you know, depending on how a business may need to do things, when you actually enter these transactions, maybe, you know, you may be doing it every day, you may be doing it once a week, or even like once a month. Doing transactional accounting or sort of moving over to this system doesn't necessarily restrict you from doing that. You can absolutely, you know, batch your sales together on a single sales receipt for like a day or a week if you need to. And you still get the same sort of reporting and actionable insights that are coming from those item receipts there.
Mm-hmm. Mm-hmm. So moving on to the next slide, where we keep mentioning journal entries. We're kind of trying to get people away from that, but then we're throwing out in conversation. So just so everybody's clear, doing your transactional accounting is creating journal entries behind the scenes.
Absolutely.
But as long as you're set up, you don't have to worry about it, and it's all done for you. Everything's going where it should with a lot less effort. So for businesses that aren't doing that, you know, what do they need to do to transition? Colin, you want to take this one?
Sure. Yeah. So, you know, when you're looking to transition to transactional accounting, the first, you know, really keystone there is setting up all of your items or products. We're calling them items and products there because depending on what accounting system you're in, they are actually sort of called different things, but they are the same as far as what you're trying to set up. When you create those items, you know, if you already are selling online, of course, you've probably created those items on your online store, and you likely have some kind of unique identifier there, like a SKU. You know, that's the type of thing that you're going to want to use across your different channels and in your accounting system to identify those products or items. So you want to start by setting those up in your accounting system with those names. And then as you do that, of course, you'll be asked to map them to things like revenue accounts, COGS accounts, and asset accounts if you're tracking inventory. And you just do that within the accounting software as you're setting up each item. If
I can jump in on this one, Colin, the nice thing about this is the mapping is you can vary that. So you can, instead of having everything go to sales revenue, you can have it, you know, go to accessories, clothing, shoes, like your different product mix.
Exactly.
Which, you know, right off the bat, you get a lot more visibility. I'm a fan of, you know, less is more. I wouldn't go crazy, and I've seen users that they have like 2 pages on their P&L and revenue account. You know, I'd say like 5 to 7 is ideal, but you don't need to just have one. This is where you can customize it.
Yeah. Yeah, it's a good point. And I should also mention in here that WebGility can definitely help facilitate this process for you. Like I mentioned, if you have, you know, an online store where you have items already set up, our Unify software is able to take those items and you can sort of selectively transfer them into your accounting system and map these accounts as you're doing that. So, you know, yeah, and with mapping those accounts and creating those items, you know, WebGility can actually help a lot with that, especially if you're a multi-channel seller. If you have your items listed across those multiple sort of online stores, if you usually have those different items up there and they may be shared across multiple stores. You may sell different catalogs on different stores, but with Unify, you can connect to those stores, view those item lists. You can sort of compare them to what's already in your accounting system. And then very easily you can do things like map those revenue and COGS accounts and just transfer those items over to get you, you know, ahead of the game, basically not having to create those manually.
Right, because you've got those items set up somewhere. If you're selling online, it's just a question of getting them into your accounting system so you can use the data. Yep.
And then the great part, sorry, Susan. And then the great part about that is that once those items are in your accounting system, you know, whether you put them in there manually or if you use something like Unify to transfer those over, Unify can also, you know, when you are recording your transactions on a daily basis from those sales channels, it's locking into all of that hard work that you sort of put up front there. And then it's doing all the heavy lifting for you in the background, just automating those transactions into the accounting system. that already, accepts those accounts that everything are tied to, and just kind of makes those decisions automatically for you.
That's right. So once you get it set up, it all flows, and the hard work's done. So let's go to the next slide and see what kind of the outcome is from this. So when you do have your items in, or your products, you can actually see data at the product level and make decisions on that. And so if we could go to the next slide, I have, I'm an accountant, so it's not real pretty. Creativity is not my thing. But here's just an example of a sales by item summary. You can get the sales by product summary in QBO. They're default reports that exist. But this is a great example where now I've got my individual items or products on the left, and I can actually see, instead of just looking at, total chocolate revenue, I can actually see my product mix, what I'm selling, how much I'm selling each one for, to get my average price and my COGS and my gross margin. And just from this, the basic steps that we talked about, I have the reports that I need to make actionable decisions, as quickly as I need to. So if we jump back, Colin, you want to throw out some other suggestions here?
Yeah, and here we were talking about class tracking a little bit earlier as well, but this is really where class tracking starts to shine if you set it up. Is that when those transactions start coming through on a daily basis, channel by channel, and they're being classed out, maybe like an Amazon store, maybe your personal website sales that are coming through. You can not only track things like overall, sales, revenue, and that kind of thing that's coming through each channel, but as you drill down to the item level with all those accounts and individual products that you set up, classes apply to those as well. So you can even see things like profitability per item, or per SKU that you're selling across different channels, kind of showing you where things are performing well and where maybe you need to make some adjustments and either replace products on other channels or remove them.
Right. So let's just, Colin, so we've probably wowed everybody with this, rushing to get started and make that transition. What are some next steps here? What can they do?
Yeah, so definitely, any content like this, if you're interested in any kind of e-commerce general news and information like that, we post things all the time on our blog about transactional accounting and e-commerce. And also, if if you think you're ready that you might want to actually start trying this out, you can visit our website and just go to that webgility.com/demo to either get set up and talk to someone or start your own free trial there.
And yeah, that's some great advice, Colin. We have a ton of content on our website that is super helpful to, someone getting started in selling in e-commerce, or like a seasoned professional who's just looking to become more agile and more efficient as a seller. So yeah, definitely check out our blog. Thank you so much to Susan and Colin for leading the discussion today. Hope you took away some tips and tricks, and we will catch you on the next webinar.
Bye-bye.